took my last week of paid vacation and went on my honeymoon. And then, January 2nd, because we don't work on holidays, I was back into work. We closed an SBA loan for me to make a balloon payment to him. And it happened to be a bank holiday that day, so he packed his office and literally moved out that afternoon. And then I was really on my own.
Welcome to Business Buying for Financial Independence. I'm Tim Delaney, and I help young professionals buy small businesses so they can escape the 9-to-5 and take control of their time, income, and future. If that sounds like you, hit the subscribe button and let's get into it. Today's guest is Aubrey Fitzloff, owner of Lifetime Insurance Agency and the host of the Carolina Business Leadership Podcast. Aubrey, welcome to Business Buying for Fi.
Thanks, Tim. It's a pleasure to be here today.
So it's January 2011, and you just became the owner of a business. Tell me what that was like.
In our situation, it was a little bit quiet because I had been working in the business for almost 5 years at that point, and the original owner and I had been transitioning all of the responsibilities over to me over the course of about 12, 18 months ahead of time, because he really wanted to make sure that I could actually run the business before he stepped away, both for my benefit and for the benefit of our insurance clients. So I came back from my honeymoon. The last week of being an employee, I took my last week of paid vacation and went on my honeymoon. And then, January 2nd, because we don't work on holidays, I was back into work. And in a lot of ways, it was business as usual because I had been running the business for a couple of years, and more so tax paperwork and, of course, making payments to the owner. That happened in the background, but it didn't change a whole lot about how we were running things day to day. What really changed was fast forward about 18 months later when we closed an SBA loan for me to make a balloon payment to him. And it happened to be a bank holiday that day, so he packed his office and literally moved out that afternoon. And then I was really on my own.
Oh, wow. Nice. So that's you dropped a term there, balloon payment, which do you
Mhm.
want to just explain what that is real quick, and then we'll go back into the
Yeah.
story?
Yeah. So I was fortunate that because I had worked with the original owner and we had worked together for a couple of years, and I was very young. I was 29, turning 30 the year that I bought the agency. I was very fortunate that he was willing to, on paper, move the ownership of the business into my name. And we did essentially some self financing where I used the proceeds from the business to make payments to him over the first 18 months. But he had a specific tax deadline in his mind that he wanted to have all his money in his hands. So he asked that I find a bank loan that essentially paid him out the remainder of what he was due. And then it was between me and the bank as far as the ownership of the business. And so that, if you've not bought an existing business before, that would be called a balloon payment. Sometimes you see it on equipment and purchases like that as well, where you make payments for a period of time and then you either refinance the balance into another loan or you hopefully have scraped up the cash to pay off whatever the balance is left.
Yeah, essentially you're paying off what's left of the loan at a fixed date.
Mhm.
It's not like a 30-year mortgage on a house where that last payment is just roughly the same monthly payment you've been making for 29 years. So it can
Yeah.
be a large amount
Yeah.
or it can be a small amount. It depends what the original amount was and how quickly you're paying it. But a lot of people like to refinance it, which is what Aubrey did with the SBA. We'll get into that in a minute. Let's back it up a little bit more and talk about why you loved insurance in the first place and how you got involved in it.
Well, the really ironic thing is I had no intention of working in insurance at all. As I mentioned, when I bought the agency, I was quite young. Working for the insurance agency, I would jokingly say was my first big girl job. I worked through college in hotels and thought I was going to continue a career in hospitality. And when some opportunities that I thought were coming didn't work out, I realized I was kind of tired of working third shift on Christmas and always having to be available on holidays. So I had a college degree, but it was in French, so it wasn't real transferable if I wasn't going to uh, go teach or go back to school. And I started working with an employment agency where they were placing me in different office environments around the city just to figure out what my next step was. And insurance was actually the one industry I told my account rep that I was not interested in because I was so young and ignorant at that time. I assumed that that would mean I would wind up in a cubicle farm and no windows and just denying claims all day. And that's still my personal idea of hell. I had no idea that you could be in the business of sales or understanding products and helping people figure out their benefits. And so my account rep literally had to convince me to go for an interview. And all it was attempt to hire administrative position. It wasn't even in sales at that point. So I would jokingly say that God put me where I was supposed to be. Now that doesn't mean that I haven't worked very hard to get where I'm at from that point, but it was very much not the plan to be in insurance, and I didn't realize I would love it. But I get to help people solve problems every day, and I regularly get to see where the products that I help people purchase make a difference in people's lives. So it's been a really good fit for me.
Nice. So from a temp to hire in an admin role at an insurance agency to the ownership of the insurance agency, how did so at some point you must have become a permanent employee and went from there?
Mhm. Yes, the temp to hire position was very temporary. It was if if they still wanted me after 60 days, they were going to bring me on full time. So I passed that hurdle. That was not really a concern. If you've worked in hotels for 3 or 4 years and worked third shifts, night shifts, and all that, then working in a quiet administrative environment, office environment is actually a really nice, easy transition. After about 6 months of being a permanent employee, the original owner and his partner at that time basically gave me the choice of getting licensed for sales. They told me it was perfectly fine if I wanted to stay administrative, but they probably weren't going to be giving me too many more raises. And at 25 years old, you can't really just accept that as the end all be all for whether or not your income is going to grow. So I did get licensed. I mentored under their office manager at that time. And then through the course of events, as sometimes happens with small businesses, the two original partners stopped seeing eye to eye. It really had nothing to do with our company. They were trying to open another company together, and it wasn't going the way they wanted it to. And they couldn't agree on the way that they wanted to proceed. But what ultimately wound up happening was one partner wound up leaving the agency, and the office manager, the fourth person in the agency at that time, she chose to go with him, and they started a new agency, and that left me with the original partner, who was a couple years out from retirement, and still he was thinking he was going to sell his shares out to the office manager. Well, that obviously didn't work out when she left our company. So we started working together over the course of the next year or so toward the idea that we would be eventually transitioning ownership to me.
What made you interested in ownership at that point?
I've always wanted to own a business. I grew up in that time where like Quickstar Amway was really popular, dabbled in that. I'm the oldest daughter of five, so I don't take direction real well. I like being in charge, and so over the course of the couple of years before he asked if I would be interested in buying him out, I had the chance to see how much income potential was available there, and that's not the primary reason I did it, but it was a growing agency in a market where I was making connections, and I'm a people person, And I really didn't have a whole lot of interest in going and working for somebody else if he sold the agency to like an equity firm or something. So I figured if it didn't work out, I could sell what was left. But I've been quite fortunate that that's not the story. You know?
That's good, and we'll get to that part of the story.
Mhm.
What you said he came to you and asked if you'd be interested. Did you drop
Mhm.
hints to him? Did you mention to him prior that you were interested, or did he just see that potential in you?
I think a little bit of both. I mean, because he was already in an agreement with the previous office manager before she left our agency, he was already in the mindset of trying to exit. I still to this day don't understand her decision to leave because she could have wound up owning it all, but that's her business, not mine. I don't know her life. Um, for me, I had proven through that time that I could keep keep the doors open, during that period before he came to me and we got serious about a timetable. Unfortunately, he had a very serious health concern that landed him in the hospital for almost 2 weeks, and it could have taken his life. He's quite fortunate that that wasn't the outcome of things, and I ran that agency for him during that time, and when you work in a small business like that, where I'm working with his clients day to day, we had gotten to know each other quite well through the years. It was a large corporate environment, like you're working side by side on things. So I think he knew that I had the entrepreneurial spirit to want to continue doing what I was doing under the name that we had been building together. And I when he said, "Hey, I'm still looking at retiring. I can sell the agency, but I'd like to know if you have interest in buying it before I start pursuing those options." To me, that seemed like an opportunity that you don't just outright say no to. So I said, "Yes, I'd be interested if we can make that work." And then, like I said, I over about 18 months, we worked toward making sure I could own the agency and could run the agency and that he wasn't leaving me in a situation where I was in over my head. And then we started literally transitioning the business to me on paper.
So it was a process. It wasn't an overnight
Mhm.
thing. Yeah,
No, it
that's
wasn't. And it was a relationship based thing as opposed to someone like yourself where you purchased a business but you weren't involved in it beforehand.
yeah, yeah. But even that, I tell people all the time. Even those, quote unquote cold transactions are
Hmm.
still very relationship based. Like you
Hmm.
still you spend a lot of time with the buyers and sellers. Spend a lot of time together, going through things, talking about things. So you have to be able to develop a good relationship. If it's adversarial or not, confrontational, it's in a small business transaction, it's probably not going to go well. Maybe in the mega corporation takeovers, it doesn't matter at the end of the day. But and even then, I'm sure it hurts things if it's not a cordial relationship. So I think any transaction is relationship based.
Oh yeah, yeah. I think in our situation, like his primary motivation to sell it to somebody who was working within the agency was that he had had clients that he'd gone to church with and done business with for more than a decade. And so he really wanted to know that they were in hands of somebody who cared to take care of them as much as he had when he owned the insurance brokerage.
That's huge. And that's a very important thing to understand as a buyer what the true motivations are of the seller. A lot of people just assume they want the highest price, but not oftentimes they just want to know that their customers and their staff and the legacy that they built will be taken care of. Like you said, they went to church with them, their neighbors. It's important
Mhm.
that he doesn't just turn around and dump them on any Joe Schmo that walks in the door.
Yeah, yeah, it's and it's one of the tenets I still carry into the business today. Um, my one of my core values is the power of relationships and doing the I mean you should do the right thing because it's the right thing to do, but if you do the right thing by the client even when there's not a sale available to you, it almost always comes back and brings other blessings and other financial opportunities into the business.
Yeah, that's definitely true. Do the right thing, be nice to people, and it'll pay off. And he must have
Mhm.
seen that in you, which is why he trusted you to carry on his legacy, and knew that you would do a good job with that. So
I mean,
you,
if I
yeah,
hadn't, he would have let me know because he's a client of mine today.
yeah,
So
nice.
I still
Uh,
hear from him about once a year. So
that's
yeah.
that's great. That's great. So you transition. So you spent some time learning, making sure So he spent some time kind of watching you run the business for him while it was still his business. So he gained the confidence to seller finance that initial transaction to you. Uh, can you share like some of the how that was structured exactly in the beginning? I know you talked about the balloon. Did you have to bring cash to the table? Did he finance the whole thing, or how did that work out?
Yeah, well, the way you value an insurance agency is a lot based on what the expected renewals of the commission sales is. And our agency, because we're a brokerage agency, we get paid by many different insurance companies. I was just going over deposits downstairs with one of my team members, and I would say we're getting paid by on the given month somewhere between 15 and 20 companies. Um, part Couple that up with, well, I guess I should say, unlike say an Allstate agency where Allstate can literally place a value on the book of the business, we had to basically take a guess as to what we both agreed what the book of the business was worth. Plus, there was goodwill because I didn't just buy his clients. I bought the name. I bought all of the furniture and the furnishings and the office supplies. I bought the phone number. I bought the websites. Sometimes in an insurance transaction, all you're doing is buying the book of business, where essentially they transfer the clients under you and you get the renewals. So it's not an easy thing to wrap up the collateral piece of what the business is worth from a bank perspective when you've got that many sources of income. And as I've said a couple of times, I was young, I was in my 20s, I was 30 the year that I purchased it. So I didn't have cash, I didn't really have assets. I was newly married, and my husband and I had a house, but that was his house beforehand. So I didn't have cash to bring to the table. And that was part of the motivation of him self financing it. He wanted his clients taken care of. If he had just wanted the highest price, I wasn't the right buyer for him because I wouldn't have been able to get the financing to buy it from him. So there was a motivation for him to basically say, hey, I would like to transition the ownership to you. There was tax advantages for him to do that because then it was capital gains as opposed to profit. So there was different tax rates for him. The way we structured that, but it involved a lot of trust on both our parts that what he was saying he thought his business was worth, that I agreed with him. And we did it as a multiple of what the commission income is, which is pretty normal in our industry. So we use the income from the business to essentially pro- allow me to buy equity or to show equity within the business. And then because after 18 months, I had X number of equity, which was kind of the agreement that whatever profit was there was made as a payment to him. It wasn't a structured, there was a minimum amount, but if there was $2,000 on top of that, I made that payment to buy, to pay the loan down faster, essentially the principal amount. And then that helped a lot when it came time to going and getting a bank loan in order to pay him out the remainder of what he was owed. That said, because it's a brokerage and because I get paid by many different insurance companies, I still couldn't get a traditional bank to underwrite it. I still did need to go through the Small Business Administration, the SBA loan process. And that probably would have been different had I had more assets in my name at that time, but I didn't. So my husband at that time and I did have to put our house up as collateral for the agency, and for the loan. And fortunately, that worked out well too because it was a short-term loan. So the agency itself was paid off within 7 years. That was the length of the term. So I was able to own it outright in less than a decade from the time that we transitioned from him to the balloon payment to the end of the SBA loan. It took a lot of hard work, but it also took trusting the process.
Yeah. So a couple things I want to touch on there is, the trust and relationship you had built with the seller allowed you essentially to buy the business with none of your own cash up front.
Hmm. Yeah.
And you decided on the value based on a multiple of the book of business. Do you know what the average multiple is in the insurance industry, just out of curiosity, or how did you decide on the
Yeah, well,
multiple?
a little bit in my aspect of the business. They usually it's somewhere between 2 and 3 times what the annualized renewals is. It depends a little bit on what the product type is. Our agency was founded and specialized in, to begin with, long-term care insurance, and so that multiple, when you're valuing it, might be a little higher than if we were looking at just my health and Medicare insurance, because you don't typically replace long-term care insurance. So it's a little considered to be a little more stable as far as the renewals go. Whereas, I could write somebody health insurance tomorrow, in 6 months, they get a job with benefits and there's no more renewals on that policy. And so what you might use as the multiple to purchase an outright just individual health insurance block may not be as high as a life insurance long-term care. So he had talked to a couple business brokers to make sure what we were looking at was fair. But it was also us agreeing that we felt that this was something that was a reasonable amount, and we both knew our clientele well. At that point, I would say it was our clientele because we'd both been working with the clients. So I think we both knew where there was room for growth and where the residuals were just going to stay.
Yeah, that's great. So the the and then the profit from the business, presumably you still paid yourself a salary during this time, or your normal commissions
Mhm.
for the work you were doing.
Yeah,
And then
yeah. My pay stayed the same through that time frame from when I was an employee, and then what was above and beyond that, as an owner, I would have taken home at the end of the month, I paid to him as principal payment.
yeah, and that's so essentially kind of using that profit to invest in the business by paying off that debt, which
Hmm.
sets you up for future success,
Hmm.
uh, and is a good way to run the business, get rid of that debt. And then you were in a good position 18 months later to go talk to a bank or to the SBA and get a refinance loan, which you mentioned having to put up your house as collateral, which is pretty
Hmm.
typical with SBA
Hmm.
loans.
Hmm.
Um, did you hesitate at all at that point? Like, did that make you nervous, or were you kind of questioning what you did or what you got yourself into at that point at all?
I mean, I did love it. I don't think anybody loves the idea of having to put their residence up. And honestly, my husband at that time, we're not married anymore, but we're still great friends. I have to, give props to him because it was putting his house up. We were married, so he was willing to do that for us to purchase the agency. But it required him to have faith in my ability, and whatnot. So no, I didn't love the idea of having to put where I sleep up as the loan, but I also had the evidence of the cash flow of the business being able to pay that loan and then some. Because when it was an SBA loan, I wasn't paying extra on the principal then. I was just letting them, draft the payment, and it was significantly less than the monthly payments I had been making to him. So I had the evidence that the cash flow was there within the business to support that loan and still continue to support me and my husband. So it was scary because if I would have failed, then all that work I had put into, somebody else would have taken all of the collateral of the business and our house. That's a scary thing. But this was the only pathway that I was aware of at that time to be able to purchase. So if we were going to do it, we had to go out on that leap of faith that I had the ability to do it. The business was well established. because the business was well established. This is 2011, but the business was established in 99. So, we had the evidence and the faith in the business to that it wasn't going to just dry up overnight.
Yeah, and that's I'm sure that made the SBA more comfortable with it. Obviously, it made the seller comfortable with it to give
Mhm.
you that loan, and
Mhm.
that's the beauty of buying an established business. If you had gone and started your own in 2011, that's 12 less years of history and brand building and community goodwill that you have. As
Mhm.
as you mentioned, it wasn't just the book of business you were buying, it was that goodwill, which in
Mhm.
insurance brokerage, that name is important. The community people know it, the past customers, neighbors,
Mhm.
all that kind of
Yeah.
stuff.
Yeah, and it's funny how often I take calls, and I'm taking calls from clients who've been with the agency longer than I have. We laugh about it, and I'm like, "They're the OG, not me."
Yeah, yeah,
But I also, think it's a point of pride that they've stayed with me through all of these years. That must mean we're doing something right. They haven't gone and found somebody else to service their policies. So,
yeah.
yeah.
Yeah. But why don't you talk a little bit about that business now? It's
Mhm.
lifetime insurance. What you
Yeah,
mentioned, they're
yeah.
focused on long term, but what's how does the business operate?
Sure. Well, the agency originally was founded and specialized in long-term care insurance. And when they brought me in and moved me into sales, basically the original owners and the office manager, I mean, I guess I would say she was a partner at that time too. She just had a very minor partnership holding. But they handed me all the Medicare and all the health insurance, the individual health insurance. And they're like, we know we need to do this because of these other types of products that we're writing, but we don't want to do this like in ourselves. So I have always been very comfortable in the Medicare market. I've been doing health insurance since before the ACA, the Affordable Care Act was a thing. That's a whole nother transition that we've seen in our business. But for the first 7 years, essentially, from the time that I had that SBA loan and he had packed his office up that afternoon, is what he was doing while I was running the business was he was doing day trading in his office for himself, not for other people, just for himself. So the stock market was closed the day we closed the loan, and he had nothing to do, so he literally packed the office and went ahead and moved out that day. I ran it by myself. I wore all the hats through the entire time that I was paying the SBA loan off. And then once the SBA loan was paid off, well, that's $3,000 a month I was no longer making a payment to. So I had free cash first I hired a business coach because I didn't have the belief that I could afford to take care of staff. And then after he and I worked together for a while and I realized I was paying him more than what I was paying the SBA loan. So at that point, I had enough evidence that I could hire an assistant and not have to worry about whether or not I could make payroll. So I hired my first assistant the year after I paid the SBA loan off. It's a good thing I did it then because then COVID came around. And then through the years, I've had a couple of part-time assistants. And about 3 years ago, one of my assistants, he said, I want to get licensed. And so I supported him through getting licensed. He started doing sales. And then again, God fortunate. I've worked hard, but I'm not going to take all the credit. I've had several other agents reach out to me and ask if there's opportunities for them to come work under my agency. So my last 3 agents that I have hired, 4 agents that I've hired, they've all come about because I have goodwill within the community. They think that I'm doing a good job. It's a name they want to be associated with, and so it's me and 3 other agents on my team now. I've had a couple leave me because life happens, and I've had a couple that I've had to let go. Um, but we're growing. We expect to bring on another team member or 2 over the next 12 months. Not everybody has to do sales, but we're getting to the point where we need a full-time admin now. We need somebody to be that original Aubrey and just answer the phone and track the commissions and make sure all the files are in order and let somebody know when somebody's behind on their commission payment and all that stuff that those of us that are outgrowing the sales part of things shouldn't be spending too much of our time doing.
Yeah. Yeah. That's interesting. So it's because I imagine you talked about having so many different agencies or different companies paying you your commissions. That has to be somewhat of a nightmare to track and make sure that you're actually getting paid properly every month, every quarter, whatever it is.
It has probably been the most challenging aspect of things since I started with the agency back in 2005. Fortunately, knock on wood, we have just in the last couple months started working with a company who developed software that's more geared toward health and life insurance agents. There's a lot of great software out there for property and casualty, your State Farms, your All States. There are a lot of CRMs and commissions tracking and software out there that's designed for that. But that's something the technology has taken longer to catch up with on the aspect of where we're at because we don't do money. So if we were financial planners, like a lot of life insurance planners are, there's software out there for that too, but that's more robust than what my needs are. So we have in fact, this payroll cycle, the as of the week that we're recording this, this payroll cycle will be the first one that we're trying live with this new software. But I think we finally have solved that problem instead of hand tracking it on a spreadsheet, which is what has been a huge amount of the admin time I've paid for. Yes, it is because we know where the majority of which carrier the majority of our money comes in on, but if I sell a large life insurance carrier case with a carrier I don't normally write with, it can take a minute to make sure we figure out when and how we're supposed to get paid on that.
Yeah. Yeah. And I would imagine that these companies probably delay, put you on some kind of terms with how far out they can push it.
Usually, like if the client pays the premium in June, I'm going to see the commission on it in July. So typically, there's not huge delays in that because a lot of it's monthly premiums. So fortunately, there now whether or not it takes 4 or 5 months to get through underwriting, and they actually, before they actually make that premium payment, that's a whole different ball of wax. But from the money coming in aspect, because it's a well-established agency, the majority of our money comes in the month after the insurance company gets the premium payment. And if somebody doesn't pay their premium, that's another aspect of the what my admin is supposed to do is make sure that if somebody's gets behind, that we get in touch with them and get that resolved because if they don't pay their premium, we don't get paid. And if they don't pay their premium for too long, the policy can cancel. And in the health insurance world, that might mean you're locked out until January next year. So it's not just about us getting paid. It really is like if you let your policy lapse, I may not be able to get you health insurance again until next year. That can be a problem. So, yeah.
Yeah, that could be a huge problem. So it's, as part of your customer service, I guess, yes, you want to get paid and them paying makes
Mhm,
you get paid, but from a
mhm.
customer service standpoint, it's probably important that you're helping keep an eye on that for some customers.
Yeah, yeah, and I mean, in a perfect world, I get them to put their premium on a bank draft, and we don't have to worry about it. But not everybody. We work with a lot of business owners. Not every business is set up where they can have that. They gotta wait and pay a little after the due date based on when their cash flow is. So, and I try to run a fine line between the balance between I will remind you to pay your premium, but I'm not gonna be a bill collector, because my viewpoint is I'm working with a lot of business owners, like, we're all adults, you have to pay your bills. That said, if you have it on a debit card and they issue you with a new, a new expiration date, it may not even occur to you that you need to update that. So, that's kinda my job is to be like, "Hey, your premium didn't get paid this month. Do we need to double check and make sure the card's still good?" Or something like that.
Yeah, and that happens. I feel like that happens more and more frequently with people as credit card
Mhm,
fraud keeps happening. So
mhm,
you don't
mhm,
think about it. You get a new card, you just go about your daily life. You forget that, oh yeah, I had that set up for this and this as
mhm,
an auto
mhm.
thing. Um,
Yeah, it's easy to do.
yeah, yeah. So you're running a successful business. You had experience before you transitioned with a seller finance note, and then you moved into that SBA. Let's let's talk about that process a little bit more in depth because I know that it can be challenging and time consuming, and you had a business to run on time. You were already in the business running it on a day to day basis. For
Mhm.
most buyers, eh, dealing with that is their full time job in and of itself. So, what was that process like? And how, did you have to go to a lot of different banks to even get one that would use the SBA, or how'd that work?
Yeah, so my guess would be that my SBA process, as frustrating as it was probably smoother than what, or I know at least from talking to other business owners who have had to go through that process that it was smoother. Um, I I had already approached 2 banks before we realized that SBA was gonna be the route that we, would have to go. So already had my financials put together into a package, which probably, for what I was doing, made things a lot easier than if, I was just starting the process. Also because what the majority of my financials are based on money in versus money out, and I don't even though I said I purchased the furniture, I purchased the office supplies, that wasn't really what the SBA or any bank was looking at when they were purchasing. It wasn't like if I was, buying a mechanics shop where we'd also be looking at the cost of the equipment and the lifts and the tools. Um, because I already had my paperwork in order because we had a good relationship with a local banker. She really thought she was going to be able to get it through based on the almost 18 months of equity that I had already paid. But it was a small bank, and the underwriters were conservative and they just weren't comfortable with it. But I had literally already gone through the paperwork process with another bank and then with the bank that we were banking with, and they were the ones that suggested an SBA loan. What I know now that I didn't know then was they were not a preferred lender with the SBA. And for those of you that are listening that might be thinking about this, having a relationship with a banker at a bank that is a preferred lender is gonna make that process smoother because it's a federally backed loan. It's the Small Business Administration is a federal agency, so anytime you get the federal government involved, there's gonna be more paperwork, there's gonna be more red tape. So if you can have somebody who can streamline that for you, that's the route you wanna go. A lot of my frustration, I think, came more from the particular vendor that my bank was partnering with, as opposed to the SBA process itself. They gave me no choice about what attorney was closing that, and that attorney wound up double checking every piece of my paperwork right down to I'd sent a copy of my driver's license and my husband at that time, his driver's license, because his name's on the deed to the house that we're using as collateral, so he had to be listed on the loan. Um, and they would email back to confirm we both had the same initial for our middle initial. And then, of course, I get a $75 bill for that email. I found that process to be very wasteful and a little bit predatory, if I'm going to be honest about it. There's nothing they can do about that. That's my opinion now. And that was mostly their attorney. And there was no choice about it. If I wanted to close the loan, I had to use their attorney. Um, the legal fees of that was the most expensive piece of it. It was almost 5 grand in legal fees, and I had all my paperwork in order. So I found that to be frustrating, but at the end of the day, I had all the paperwork in order. It was just, are they gonna loan me this money or not? I didn't have to go chase down a bunch of things. One piece that they did require that we weren't expecting is they wanted a new lease. Um, and so I wound up making the decision to relocate the office as part of that loan because I was driving 40 minutes across town to where the office was originally located. And that made sense for where the original owner lived, but it didn't make sense for me. So, in addition to that, I was also trying to negotiate and upfit a new office space. That was expensive, but that's part of doing business. Um, there were a lot of little hiccups like that, but in the long run, I would say it was smoother than what I know from other from other people who have gone through that process. It only took us 6 months. I know of people where it took 16 months and they had their paperwork in order, but they were also trying to, finance equipment and set up commercial kitchens and just more complex situations than mine.
Yeah. Yeah. 6 months is not the worst I've heard. It's not the best I've heard, but that
Hmm.
I just want to touch on that preferred lender piece. There are certain banks that pretty much any bank can do an SBA backed loan, but there are a number of banks around the country that do enough SBA backed loans that the SBA trusts them to make decisions without having to involve bank like SBA officials in every step of the process, which can speed it up a little bit in theory. But even those preferred lenders are super diligent with SBA backed loans because they don't want to lose that status with the SBA
Hmm.
either. So they're
Yeah.
careful. They don't want to screw up. They don't want to write a bad loan. Even though they're getting backed, they don't want to write a bad loan because if they write too many bad loans, the SBA won't back them anymore. Um,
Yeah.
and then, uh, I just want to circle back for the listeners so that they understand why you did it this way. Of you essentially bought the business with no cash out of your pocket. So you were
Hmm.
financing about 100% of the business, which meant
Hmm.
that if you had to have gone to a bank at that point, they wouldn't have given you a loan. Even with the SBA
Correct.
backing, they would have said, no, you don't have any skin in the game. You're not bringing any
Hmm.
cash. You have no equity. Fast forward
Hmm.
18 months, you had built equity by paying down that initial note. So the SBA considered that equity that you built as your cash into the business. Is that correct?
Yeah, between that and the value of our home, yes, they were
Okay.
willing
Yeah.
to have a discussion. And when I look back at it, I had about 30% equity in the from the original purchase price over the course of that 18 months, because I had started at 12 months trying to get a bank loan, and then
Yeah.
it took 6 months to get the SBA loan.
Yeah.
So, the every month that it delayed, I had more equity. So I had at least some track record of the fact that I wasn't going to drive this business into the ground. But I didn't have as much. And I even tried to refinance the SBA loan about 5 years in to the 7 year note, mostly because the vendor that I used required me to send them every single, this was more of a Aubrey comfort level. Aubrey likes to keep her business in her own pocket. They wanted financial statements from us every single year in order to maintain the loan, not just business statements. They wanted our credit card balances to know what the value of our cars were, to know how much life insurance we were carrying on each other. And for me, this is just my personal viewpoint. I found that to be intrusive. And so I was even willing to take a higher interest rate just to have that scrutiny removed. I tried with the same bank that originally I had tried with, the small local bank that I had a relationship with, and unfortunately, even then, because of me being a broker with so many different payees, they still just weren't comfortable with it. So I just stuck with it and paid the note off.
Yeah. 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 So that's impressive to go from 0% equity to 30% equity in 18 months, just using the profits from the business. It's good discipline and obviously good management of the
I'm a hard
business.
worker,
Yep.
and the
That's
business was
awesome.
profitable.
Yeah. Yeah. Uh, and then you also, I just want to touch on the fact that you said you didn't pay the SBA extra. So then you went back to just their consistent payments month to month,
Hmm. Hmm.
so that you could benefit a little bit from that extra profit,
Hmm.
presumably, and enjoy your life as a business owner, to some extent. And that's good. So, you mentioned life insurance with the SBA. Did they demand that you had life insurance on yourself when you were closing the loan?
Hmm.
Yeah,
Yeah.
that's
Yeah.
that's
They took an assignment on my life insurance policy so that if I passed away, they'd
yep,
get their money.
yep, and
And
that's
in that situation, I think that would have left the business in my husband's hands because it would have paid the note. So I wasn't opposed to that. I think that's a wise thing. Hey, I sell a lot of life insurance for exactly that reason, to cover people's debts in the event that, that's it. key man insurance is a thing in business, so that's essentially what they've required was a key man policy. I just chose to put an assignment on an existing policy as opposed to purchase a whole separate policy, partly because I was young and I had jumped out of a couple airplanes for no good reason. And skydiving will increase your life insurance rates.
That's
Fun
why I
fact
don't
for
go
the listeners.
skydiving. Yep.
Well, I don't either, I'm in my 40s now. I keep my feet on the ground when I need to.
Yeah. Yeah. That's yeah. I I also had to get life insurance. I did not have life insurance when I purchased the wine and liquor store and used the SBA, and they
Mhm.
wanted a policy that covered at least the balance of the loan, and I used that opportunity because I had a newborn at home anyway to get a
Mhm.
good policy. And I would, that's something I recommend to anybody that is young and healthy that thinks that they might buy a business in the future or get into business ownership. It doesn't hurt to get out there and get that policy earlier, pay less for it, right?
Yeah.
I mean,
I agree. I mean,
you
you're
can,
never younger and healthier than you are right now.
yep,
So, regardless of what type of insurance we're talking about, except for car insurance, then you want your age. But
yeah,
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 you're never younger and healthier than you are right now. So, there's a lot of reasons for young people to buy life insurance. Like we'll get into what I actually do, but especially if you know you're going to have a family, if you think that you would want to buy a business, if you think that you just like to buy a bigger house one of these days, and you just don't know what life will bring. Getting something, it can be very, very, very cost effective. And if you ever need help with that, I know a gal who can help you. So,
yes, yep. That's everybody should
shameless plug.
give out. That's no shameless plugs here. That's your business, and you're entitled to share it. And I do.
I'm
I want to give.
licensed in at least
Yep.
5 states.
Perfect. Perfect. That's so if you are in need of it or want to hear a little bit more about the options that are available to you, definitely give Aubrey a call. If somebody is looking to buy a life insurance agency or something of that nature, or just an insurance agency, I do see those
Mhm.
pop up sometimes. I'm going to assume that somebody that's buying one is probably already a licensed insurance salesperson. And but what should they be looking at if they're going to go buy an agency and they haven't had the luxury of working in it for a few years like you did?
Well, I'd like to approach answering that a little bit differently than the way you asked it. When I remarried a couple years ago, my spouse was working for a company that was 160 miles from where I lived. And so I wound up moving and commuting back and forth. Do not recommend that. But one of the things that I looked at the time, because the company that they were working for had offices all over the nation, and we were like, well, we don't know. They might be asked to relocate to Alabama or Minnesota or like any of these other locations. So I sat down with a business broker to discuss it. Even though I didn't intend to sell at that time, I thought the 160-mile commute was something that I could manage and continue to be present in my existing office. And I was hoping to open a second office in the other state, more as an idea of future proofing my ability to sell it if we were asked to relocate more than 3 hours away. And what his advice was so much of what I do is based on relationship. That you need to figure out ways to make your business look more systematized, almost more like a franchise. Because if somebody is looking at purchasing it, they're not going to be able to step in and have those relationships. So they're going to need to rely on those systems. So to come back around to what you were asking, if somebody were looking at purchasing an established agency as an individual. I don't know a lot of agents that have come into the ownership where that's the way that's worked out. Usually it's a situation where they've either started it and grown it themselves or they worked for a family member. I know several agency owners that are second or third generation owners. But if you were thinking, hey, I'd like to get in, I might have an opportunity, I might know an agent who's getting ready to retire like what I had, what I would be looking at is what do they have in place as far as systems go? Do they have a good communication system for their clients that doesn't just rely on them calling their clients? Do they have a good commissions tracking system so that they know what their numbers are? Unfortunately, I know a lot of agents that they can pay their bills, but they don't really know where their numbers are. They rely on their upline agency for that. Do they have staff already so that there's somebody there that has the trust already built with the clients? I guess I do know another agent that bought an Allstate agent, and he kept all the staff. So and that's my property and casualty agency. So when I call, I still talk to Melinda. Melinda still services my policies. Now, when I have new sale questions, I talk to Corey, the owner of the agency. But Melinda's my gal, I know her daughter's names. She knows all my stuff because that's where the relationship was. And he paid more for that agency because he paid to keep the staff. So if you're thinking about purchasing and if you haven't already worked within it, then you really need to look at it like any other business. Like what systems are there that are making that successful? Because if it's all just dependent, especially on one producer, those clients don't have a reason to stay with you. They trust that agent. They don't know you. So and when I've had opportunity to evaluate other books, because I've had situations where unfortunately I know agents that have passed and their widows have reached out to try to sell that block of business. I wouldn't make a multiple lump sum purchase like I did with my agency. What I have proposed in the couple of situations, one widow took it, the other one didn't, was I will pay you a commission split over a course of time of whatever continues to stay on the books for the next X number of years. Because I don't want your husband's, these are both situations where it's male. I hope we see more older female agents over the course of time. But I don't have a relationship with these clients, so I don't know that they're going to stay with me. I will do what I can do, but I can't just pay you outright lump sum if 90% of them could walk next open enrollment. And that's worked out well so far with the one widow that did choose to sell her husband's block to me. But we have to do extra work to touch those clients so they know who we are, so they respond when we need to take care of them.
Yeah. Yeah. So, like with a lot of other
Mhm.
businesses, insurance, and probably even more so than a lot of other businesses, insurance is a very relationship based uh, business operation. So, if you're going to buy an agency like this, or insurance or similar types of brokerages, agencies,
Mhm.
you do need to make sure that the owner is not the sole producer, the sole salesperson, the sole customer relations person, and that they have
Mhm.
good systems in place that you can take over. So you're
Yeah.
not potentially losing all the customers in year one.
Yeah, and if you can
Yeah.
build a warm-up period in place where it's like, oh, the owner agrees to remain involved, maybe for a consulting salary for 12 months or whatever to make that handoff warm, like we did in my situation. By the time he was telling people that, hey, Aubrey's bought the agency, so I'll catch up with you for a minute, but then I'm going to transfer you over to her. They had been calling me for their service stuff anyway. But, if you weren't already within the agency, if the owner is willing or if the circumstances allow for somebody who's already got those relationships to stay in there and there be a warm handoff period, I think that would be very successful. That is what I am thinking about with another agent who maybe wants to get out of the health insurance agency. He wants to keep his group insurance. He wants to get out of the individual health insurance. And
Hmm.
so if we make the numbers work on that, I would like for there to be some sort of warm handoff period, not they just get a letter like I had to do with my client for my clients whose agent had passed away. There was no way to do anything else. Um, but for them to do that warm introduction like you would do on LinkedIn when you're introducing two people. And I think he would do that if we can make the numbers work. If he actually wants to sell. I think he just got frustrated. It was a hard enrollment season this last year.
Yep.
I
Yep.
hope he's not getting out. He's been a good mentor to me for the last 20 years. So
Yeah.
I don't want him going away selfishly because I like seeing him at events and like seeing what's going on.
Yeah. Yeah. And I mean, not that you want to take advantage of a situation, and I'm for lack of a better term, but those are the
Hmm.
type of sellers that are good people to be networking with and staying on their
Hmm.
radar. That okay,
Hmm.
they've been in it for a long time. It's getting more and more frustrating. I mean, I'm sure, especially in the insurance industry, as things change and get harder. But it happens. It happens in any business that the owner, the longer they're there, the more certain things tend to grind on them and wear them out. And it's, so being there and networking with them and staying on their radar is a good way of getting that opportunity when it does arise and they are ready to sell. So
Yeah, that situation is a little odd though, because his son already took over ownership of the agency. So I think they're just frustrated with open enrollment, individual health insurance, ACA, healthcare.gov, Obamacare, I don't care what you call it, that process. And it was a tough year this past year because we saw significant shifts in subsidy eligibility. There were a lot of hard phone calls of scale, and your insurance doesn't cost you $250 a month anymore. Now it costs you $2,300 because you make too much money to get a subsidy. That was a hard year for everybody who managed to stay in. And I did see some younger agents or people who are about my age but don't have as many years experience decide this isn't really for them. I wish they would have come and talked to me before they decided to close their agency because I'm sure we could have worked something out.
yeah,
But it is what it is.
yeah, yeah. That's too bad. Um, so before we get out of here, why don't you take a few
Mhm.
minutes and tell everybody what it is that you do and what business owners in particular should be looking out for in their insurance needs?
Sure. So, to go back, my name's Aubrey Fitzloff. I'm the owner of Lifetime Insurance Agency. We're a brokerage agency, which means we represent more than one company. We're based out of Columbia, South Carolina, but all of my agents are licensed in North and South Carolina. So, primarily, we work with small business owners in the Carolinas across those two states. Although I do life insurance in a couple of other states, helping them figure out how to offer benefits to their employees, or if they're not in a position to offer group benefits to their employees, to work directly with their employees so that they can get their health insurance, their Medicare as they're transitioning out of the group health insurance space. And then we also do long term care. Income protection or disability insurance, and life insurance, as I've mentioned. All of those can be put into like a group employer based setting, or individuals can purchase them. So we work in both settings. One of the things that I think a lot of employers are not really thinking about, they kind of know, oh, the traditional group insurance, and they know that that can be expensive, and it is. But there's a lot of new options out there. One that we're talking with a lot of smaller businesses, because most of my companies are less than 50 employees. Most of my employers are less than 10 employees. um, is looking at more of what options can you offer in the individual health insurance space, but still help your employees. And there's things like ICRA, individual coverage health reimbursement arrangement. It sounds a little bit like you're sneezing, that can allow you the same tax benefits of offering group health insurance, but more flexibility and a little more control over your benefits. That's been something I've been talking with a lot of business owners about over the course of the last year. Then, from the standpoint of owning your business and when you might choose to exit your business, since Tim's podcast is for business owners and people who are either wanting to start businesses or purchase businesses or maybe get out and do something new, I would say, just like I was saying about an agency owner who might want to sell, getting your systems in place is really, really, really important. But also take a good hard look at who your key employees are and make sure that from a life insurance and a disability insurance protection standpoint, you've talked to a broker about how that could financially affect your business if one of those people was suddenly to be gone. And when I say gone, meaning they cannot come to work, or they are no longer with us on the planet, not they have taken another position. That can really affect the value of your business if a key employee if there's a life insurance policy there that's kind of golden handcuffs to keep them there, even through an employment transition. And sometimes that key employee might be your next buyer. So that can be a way to do that. But those are a couple of things that, sometimes I hear business owners, they're not even really thinking about. I harp on disability insurance, which is basically paycheck protection. If you're a small business owner and you are offering benefits and you want to do something to take care of your employees, pay for short-term disability insurance. It takes away the guesswork if they can't come to work, if they break their leg, and you don't have to decide whether or not you have the money in payroll to pay them, and you don't have to tell them, "I'm sorry, you don't have a paycheck to take care of your family." It is so inexpensive compared to the hard decisions that come when you have an employee. It's not an if. If you have employees, eventually it will be a when you have an employee who can't come back to work and it's gonna be more than a week.
Yeah. Yeah, that's a good point. A lot of people think about life insurance to protect themselves and key employees, but that disability can sometimes be just as bad, if not worse. If that key employee is out of work and isn't allowed to work or can't come in for weeks or months, it's helpful for them, obviously, to still be able to get a paycheck and coverage for the business to replace them temporarily or, help cover
Well,
some of that
if nothing
cost.
else, it takes the stress of, do I pay them anyway? Because let's be real, most Americans could not cover a 30-day loss of income. So even one paycheck can really affect your employees and whether or not they can put groceries on the table and whether or not they can pay their mortgage or their rent. You're going to write the paycheck because you're not going to be willing to see their kids go hungry. But a, just a couple $100s a month on a disability policy could take that concern off your plate.
Yep. Yeah, good point. Thanks for sharing that, and thank you for all of everything you've shared today, from going to a temp admin person to a insurance salesperson to an agency brokerage owner is quite the story. And it gets. I do talk a lot, and there's a lot of other people that harp on it a lot more. Of there are ways to buy a business with very little or no money. Aubrey is proof that can be possible. It's not always easy, and she had an inside track, so it is a little bit different.
Yeah, but the sweat
And
equity is real.
yep,
Be prepared to
yep,
work.
yep, exactly. And then she used very creative ways to get ownership between the seller financing and then refinancing into an SBA loan. Most people try to avoid those when they're purchasing the business, but Aubrey did it after she purchased the business, which is even more impressive. So I think there was a lot to take away here today. Aubrey Fitzloff, thank you very much for joining us. Anything else you want to leave the audience with and tell them where or how they can find you?
Sure. Well, if you look for us on socials, we're Lifetime Agency across anything, and we like to be people, not perfect on socials. So you'll see us doing silly things as our team. We very much like to do our social media over beers. So, but I would not be a good podcast host myself if I didn't let you know that my team and I also host a business leadership podcast called Carolina Business. Oh my goodness. Carolina Business Leadership Show. We rebranded that this year, and I almost forgot the name of my own podcast. And that's all over the social medias as well, where we interview founders and leaders and entrepreneurs around the Carolinas, and specifically about how they've grown their businesses, how they've grown their teams, the leadership things that they've had to learn, and the lessons they would want younger business owners to learn instead of having to learn the hard way. So I would love if you check us out. And if you know a business owner in the Carolinas that you think has an interesting story, point them my way because I'd love to talk to them.
Awesome. Well, Aubrey, thank you so much for being here. Listeners, thank you for sticking around, and we will see you again soon. Cheers. Thanks for listening to Business Buying for Financial Independence. If you're serious about owning your time and building long-term wealth, make sure to subscribe so you don't miss the next episode.